Today we're going to talk about TLT ETF inflation-adjusted returns all the way back to inception 22 years ago. There is over $57 billion in TLT ETF. Lots of people own it, but I think most people don't know why they own it. If you are retired or near retirement and your robo-advisor or your financial advisor has added TLT to your portfolio, or you've had it in your portfolio for a long time, I'm making this video for all of you to question, why do you own this ETF? After you watch this video, you're going to see that for a retiree who's used TLT for a long time, it's been a loser the whole time. In inflation-adjusted terms, TLT has provided no real returns since inception, and that's a big deal. So you really want to question, why do I own this ETF in my portfolio, as many people do? So with that in mind, let's dive into it. Let's start our analysis with an illustration for a retiree who invested $100,000 in TLT when the ETF first became available back in July of 2002, 22 plus years ago. This retiree has invested $100,000 and has spent the income the entire time. So if you had retired back in 2002 and invested $100,000 in TLT, today you would have $111,000. Not much inflation protection over the last 22 plus years. Core inflation has averaged 2.37% since TLT's inception back in 2002. Now, over that time period, inflation has been lower and it's been higher, but when you add it all up, core prices are up about 70% in the last 22 years. And here is what all that inflation has done to our retirees' $100,000 investment in TLT. Our $100,000 investment should now be at least $170,000 if we were going to keep pace with core inflation. Instead, we have $111,803. That means that we've got a $58,197 loss in inflation-adjusted terms on the principal for this retiree. So the big picture is that the $100,000 investment in TLT 22 years ago has provided no inflation protection. In fact, inflation losses on the principal ever since inception. Think of it like buying a rental property. Most people buy a rental property and they're hoping for appreciation over time. In addition to the rental income stream, they're hoping that their real estate will go up in value over time. In this case, you're buying an asset to give you income, the TLT ETF, but you're not getting any appreciation, or a de minimis appreciation rather, for a 22-year period. That's almost a full retirement. Now let's take a look at what happened with the income stream on TLT going back to inception 22 years ago. If you made a $100,000 investment in TLT when it first started trading in July of 2002, you have received $93,826 to date. In your first calendar year, you received $5,484 of income, but over time, that income has gone down in value, hence no inflation protection with the income stream. By 2023, your annual dividend, your income off of TLT, was down to $4,042 per year. The income loss on TLT has been significant. In 2003, you were receiving $5,484 a year. By 2023, you're down to $4,042 a year. That's a 26% loss on your income stream, which is really difficult if you are retired. But it's worse than that. We have to consider the impact of inflation. As I said before, core prices are up about 70% over this time period. So if we look at our 2003 cash flow and we adjust it for core inflation, we should see a cash flow of $9,332 per year. Instead, our 2023 cash flow is $4,042 $42 a year. That means you have a 57% loss on your income stream when we account for inflation. You've got a $5,290 inflation adjusted loss on your annual income stream on TLT. No growth in your income, just losses. Since TLT has been a dud for the last 22 years, does that mean it's on sale? A lot of people think so. Over $14 billion has flowed into TLT this year, so a lot of people are betting it's some kind of a deal. Well, let's see if it's really on sale. Here's a look at the current after-tax and inflation-adjusted true yield on TLT. You're losing 48 basis points, almost 0.5%, just to hold this investment. After we adjust for taxes and inflation, this is definitely a loser. There's no yield there. We're starting with the current dividend yield of 4.07. We're assuming you pay 30 cents on the dollar in taxes, so you get to keep 70% of the yield. Your after-tax yield is 2.85. Then we back out core inflation, which is 3.33, and here's your loss. So I'm not really sure what the $14+ billion of new money flowing into TLT is chasing. I think a lot of people were betting on some kind of a bounce from the Fed cutting interest rates. I have other videos on that. I'd encourage you to watch them. But ultimately, this is not a great investment. It's certainly not a deal right now when it costs you 0.5 point for the average person to hold it. Now, you can adjust the tax multiplier. You could move your tax bracket down to 20% or up to 40%. It's not going to move the needle a whole bunch. You're losing money any way you slice it. So this is something that you want to analyze and really consider. Ask your robo-advisor or financial advisor, why do I own this investment? So let's sum it all up. TLT has been a loser for the retiree who bought it 22 years ago and has used it throughout their retirement as an income source. In inflation-adjusted terms, both the principal and the income stream have come nowhere near keeping pace with inflation. TLT is not a deal right now when we consider the true yield after adjusting for inflation and taxes. It's costing the average person about 0.5 point a year just to own it. Not a good deal. And yet, over $14 billion has flowed into this ETF this year. Again, lots of people own it. Robo-advisors love it. Financial advisors use it. And if you're the person who owns it, you need to start questioning, why do I own this investment? Where is the upside? We're looking at huge deficits, $2 trillion a year and growing for the next decade. If we look at the information from the Congressional Budget Office, a nonpartisan institute, right? We're looking at massive deficits. Now, who knows what's going to happen with the new administration, and hopefully great things. But with the amount of debt and the deficits that we're looking at, things might get weird. Inflation might come back. Interest rates may go up. So where is the upside in TLT? That's what I would be asking if you're the person watching it and you own it and you don't know why. I hope this video was helpful. I hope it gets you thinking, helps you better analyze your investments, and overall improve your family's financial plan.